This is FarmDKS with FarmDCapital.com and the Trading Doggy Style newsletter. And we're going to talk about box tonight because who doesn't love a good box? We had a nice box breakdown trade today that just absolutely ran and ran and ran. And so there were some people that are interested to seeing just, a little bit about how I trade a box, a little bit how, I draw them, what goes into it. And so I thought I'd do a quick video to talk just a little bit about that. First things first, a box is really just a range of consolidation. This is nothing new. Different people will, they see it a little bit differently, but it's generally a range of consolidation that precedes trend. And so in drawing them, you're looking to capture, as much price action as possible. Whether or not you include wicks or just bodies is a little bit nuanced. I personally will slap a volume profile on there. I have an understanding of market structure, market profile. So I will tweak my boxes based on, again, some nuance. But you're 90% of the way there if you're just capturing a clear and obvious range of price action consolidation. So let's talk about the trades then that you can take off of a box. So first and foremost, you generally want to be a seller at the top of the box and you want to be a buyer at the bottom of the box. Now, that doesn't mean you get long every single time you're at the bottom of a box. It doesn't mean you get short every time you're at the top of the box. But that's like a general rule. For me, I actually have a preference for the failed breakouts or breakdowns when I am trading a box. So let's cover those first. So the first scenario is, we get a apparent breakout, right? So we look above this box, we fail back within it, and in an ideal scenario, we come back up and we back test the top of the box and we see a strong sell response and we roll with that seller. Our first and really primary target is the bottom of the box. We don't know that it's going to break, but I will say that the failed breakout or the look above and fail of a box lends this to be much more likely that you will see a downside break with continuation. It did not look above and fail the box here. This isn't a look above and fail. The box wasn't here when this price action occurred. So it is more likely to see a break with continuation if you fail the top side first. Because think about it, you have plenty of breakout longs. They think here that, okay, well, we finally got rid of this seller. We're going to go to the moon, and they get long. Then seller stomps on them. They've got their stops sitting right here. So, they puke, or maybe they wait for here to see if, maybe they can break back out. Seller steps in and traps them. And then they go ahead and liquidate their long. So it's generally much stronger because you have the addition of the breakout buyers or sellers on top of, just the rest of the participants sitting in that range. So look above and fail, look below and fail. And again, it's not always going to be as clean as getting a nice, perfect back test. Sometimes you'll see a box reclaim just rip to the top or, rip straight to the bottom. And then other times you'll just see it kind of sit here at the bottom of the box and you're like, well, this isn't a very strong move. Do I want to take this? And so there is, again, some nuance. There are, some things that I teach, my students in terms of price action within the box that can help make an assessment about whether it is likely to work or not. And so I think this brings up an important point, before I get to, breakout and breakdown, that when you learn something new or exposed to something new, or even just try to apply something different that may or may not be a new concept to you, many people will just, see it everywhere. And so, if you start seeing boxes everywhere and you're jumping at the opportunity to trade one of these, don't force it because, that does tend to happen. And then, you'll get short every 1 minute failed breakout of a box and just get chopped up. So, what I like to do when I learn something new is go to a chart, right? After market is closed, see if it worked, see if it didn't work, and then ask myself, why didn't it work? Why did it work? And see if I can answer those questions before, I start applying something new to my trading. So that was just kind of a sidebar that I tell all my students anyways, don't rush out to try something new, the next day, with size. So in addition to look above and fail, look below and fail, you've got, clearly a breakout long. Now, I will say that especially the last couple of years, I've been very cautious about breakouts and breakdowns. And so, I generally will not buy an initial breakout. I'm waiting for the retest. I think that makes a lot more sense. I will add to that, you don't know that this retest is going to hold ahead of time. Of course, you can see things in price or in order flow, or whatever kind of trader that you are, that might help you to confirm that it is likely to hold. But you really get kind of more confirmation once a higher high is made after the breakout and the back test, so you can feel a little bit better holding some of your position and having a little bit less of a sweat. So same thing, breakdown, back test, resumption lower. So is it always this clean, with these nice clean back tests? Absolutely not. And that's where experience comes in. And that's just something that you can't teach every potential scenario and what the price action might look like. So again, recap, look above and fail, targeting the other side of the box, keep some runners for a continuation breakdown. Look below and fail the box, long here, target the top of the box, runners for a breakout with continuation. You can trade the breakout if it holds a back test and resumes higher, and same thing with the breakdown. So those are the 4 trades that you can take around a box. Now, again, you can sell the top, you can long the bottom. Obviously, selling the top, here, worked, and without characterizing this as a look above and fail, that's fine. Within the context of the day, coming into that, wasn't really super bearish. So I'm a little bit less likely to just randomly short the top of a box at the top of an uptrend. I really kind of prefer the look above and fail ideally, but that's just one example of some nuance, right? If we're in an active downtrend, if monthly is trending down, weekly is trending down, daily is trending down, the session is trending down, and I see a look above and fail of a box, I'm very likely to slam that with size. If I see a breakdown with a back test, I'm very likely willing to take that trade. Maybe not as sized up as I am here because risk is very, very tight on a look above, look below, and fail. But that's just one example of some nuance and considerations that might go into whether or not you trade a box. So enough for tonight. I'll be putting together some more material specifically on how I draw my boxes and what goes into that. But that'll probably be saved for kind of like a more advanced and longer session.